Welcome everyone to this week's HumpDay Market Recap series. If you guys are enjoying this type of market recap videos with CFO, make sure you guys let me know by commenting down below and subscribing to the CFO channel if you are new. And of course, for good luck for the rest of this week, press that like button down below. Alright, let's begin. So first off, the markets hit new all-time highs. So congratulations to all the long-term investors. You guys have finally made it. Now, this is a huge win for the bulls who seemed to be gone last week around here, but showed up in a big way this week. And so this has also been a huge loss on the other side for the shorts, as they have been completely obliterated since this year began. In fact, people are currently wondering if there are any institutional or retail investors who are truly short and bearish for the near and long-term future. But instead of focusing on all that noise, it's been a great quarter two for us this year, and we should continue to see new all-time high prints in the overall markets for the next couple of weeks. Now, with that being said, let's get into a little bit more of the specifics of this video. I want to briefly go over IWM since I have been increasing my mention of the small cap index for the past week and a half. So the small caps have been a huge laggard for multiple years, as we all know by now, and have been hurting investors who have been long on this index compared to the S&P 500 or ticker symbols SPY/SPX. But everyone, and I mean everyone, has been looking at specific pivotal signs that can create a massive inflection point for the overall market cap. And that is where this year's potential comes in. As we all know by now, the Federal Reserve has plans to cut rates once or twice before this fiscal year is over. In fact, as you all should know by now, small caps made an impulsive, sharp move to the upside late last year in anticipation of a new fiscal year filled with rate cuts. But now, with the current knowledge of the Federal Reserve's actions and thoughts, they are only willing to do this rate cut if they get the confirmed signals from the overall economy and the labor market. And that is the reason why we have been moving sideways since this year started. Now, we have been getting such confirmation signals very recently, even if overall inflation has seen a slight uptick. And we also know that the Federal Reserve is comfortable and well positioned with their current monetary policy and the federal funds rate because, well, that's exactly what they told us through Jerome Powell himself and the minutes report from the FOMC meetings. So why have the markets become sensitive again to rates, the Fed's words and actions again, especially earlier this year and just about 2 months ago? Well, as I've already explained a few months ago, there will be telling signs that rates are finally topping out. Specifically, rates will be coming out of their pausing period to a steep rate cut environment. But this is where the doubts come in. These flip-flopping human emotions and feelings in that rates won't be cut or will be cut usually indicate that a large pivotal move is underway. Such tiny, meaningless oscillations create the stepping stool for the first official rate cut. That is the major sign that I have been telling you guys even before this year started, and also clearly explains the sideways price action since this year began for IWM. In fact, do you guys remember when I was talking to you guys about inflation before it began to top out and move lower in early 2022? I specifically said that we will be seeing a quote-unquote descending trend in the inflation data that is preceded by tiny oscillations in the month-over-month data. On top of this, I also told you guys that you need to be prepared to see the inflation data seeing similar oscillations of tiny jumps up and tiny jumps back down or moves back down when the data gets very, very close to the Fed's inflation target of 2%. And that is currently what we are seeing right now. So I really hope that I am jogging your memory at this point. Now, I'm sure the institutions, the hedge funds, and big money or smart money are already positioned well, as they should know all about this. But most retail investors do not know about this, which is why I always tell you all to pay attention to what I clearly tell you guys. Now, with the backing of huge institutions, IWM should break out of this deadlock sideways consolidation phase at last year's highs, okay, right around here, and go right back to the 2021 all-time high prices that we saw, so right around here. And the CFO Swing Watch report readers and private members of the CFO Discord community has been alerted with one of the two currently planned positions on IWM. So if you want to execute and have the two layered positions on this index, you're welcome to join us. And last but not least, to finish off this video, I want to give you guys one more potential mean reversion trade idea for the month of June. And if you guys have been following my videos and the content that I post on Instagram and Twitter, and obviously this channel, you should clearly understand that we are now in a mean reversion environment for a lot of beaten down stocks. But this particular mean reversion trade idea depends on an earnings report and its reaction to that report. And that ticker is FIVE or five below. So let's take this from a top-down approach on the technical analysis, because it's critical to understand why this ticker can be a great mean reversion trade by the end of this week. So as seen here, okay, the stock, okay, has reacted to some very poor quarterly earnings results and some pessimistic words from its own CEO. And the share price ended up closing at $112.25. Now, this number is very important to know, because if you take a look at the monthly time frame here for 5, right, we are right back down to a significant support level that I had drawn back in 2018, so late 2018 here. Now, obviously, the share price isn't shown on both of these two levels that I've drawn here back in 2018, because I used an outdated TradingView tool, okay? But if I redo these significant levels here, okay? So one right here and right here as well, okay? You can clearly see that the after hours price action has allowed the price to get right back down to this significant lower range area of 109 to 1010. Okay, so it's a specific area, not just a specific level at 109.50, and an upper range level of 130. Okay, so let's make that a bit more specific here. Right? Now, based on the current after hours price action, okay, the monthly RSI has been trending down since the price has been trending down as well. But based on that after hours reaction, there is a slight chance that the RSI will be showing the oversold value of 30, again, on the monthly time frame. However, on the weekly and daily time frames, it's guaranteed that by market open tomorrow, the RSI will be for sure very, very oversold, which makes it a great candidate for a mean reversion trade that occurs from an oversold bounce. So what I want to see tomorrow at market open is a quick drive down towards that 110 to 109 demand area. That was, again, a huge demand area back in late 2018 and most of 2019. And once it reaches that area, we want to be long, because if the price pivots from that point, which I think it will do that, we can see a very nice potential weeks-long or months-long mean reversion trade back to the upside. Now, if we do see a pivot at this 110 to 109 demand area, that also means that we can be looking at a potential monthly time frame macro double bottom. Okay, now this is only going to appear if and only if we see an actual pivot at this demand area between 110 and 109. And so from this monthly perspective, if we're being a lot more optimistic compared to today's pessimistic CEO, we can see a complete reversion back to the all-time high level of $212.50. This is the all-time high upper range level. Obviously, it's not the official all-time high price of $237.86, but this is the significant monthly resistance level that we rejected off of 4 months ago. Okay? So hopefully you guys are able to get this specific mean reversion trade before this week ends. Alright, that is it for this video. If you liked what you heard, please leave a thumbs up down below and hit that subscribe button. But if you're new here and want to join the CFO Swing Watch report and the private CFO Discord community, you can get 50% off for your first 30 days. In fact, 2 out of the 3 spots have already been taken for the month of June, as the second spot was taken today during market hours. It's a first come, first serve basis, so all you need to do is DM me on Instagram at ChartsFocus1 to claim the last spot for the month of June. And if you join tonight, you can gain full access to the current swing trades that we have on right now, the weekly and previous CFO Swing Watch reports, and much more. So make sure you guys DM me on Instagram at ChartsFocus1. Also, make sure you guys check out the other videos on this channel to continue your learning in trading. Thank you guys so much for watching, and I'll see you guys next Wednesday.